Hey there, and welcome back to Crypto Clarified, Investing in the Truth. This is a podcast series where we come together to discuss the most captivating headlines and trends from the crypto space. My name is Benjamin Dean, and I'm Director in WisdomTree's Digital Assets team. Today, I've got the pleasure of being joined by Brett Scott. He's the author of Cloud Money, Cash Cards, Crypto, and the War for Our Wallets. This is going to be an excellent discussion, and I can't wait to do it. Before we do, though, we've got some housekeeping. We've got social media shout-outs. You can find me on the Bird app at Benjamin Dean. If you're in the US, join the WisdomTree Prime waitlist, wisdomtreeprime.com. And wherever you're listening or watching this, hit the subscribe button so you'll get all of the latest updates as we release new episodes. So today's episode, we're talking with Brett about what I think is going to be a wide range of topics, and I'm really looking forward to this one. After Brett introduces himself, and we talk a little bit about his book, we're going to discuss a few topics. They're going to range from digitisation of money, the pros and cons of cash versus something like Bitcoin. We're going to talk about how the crypto space is blurring with traditional finance. And then we're going to think a little bit about the future, as always. What are the consequences of this change on our societies, economies, and how can we manage those? Because there's always pros and cons. That's just the way technological change works, I'm afraid. Before we get going, we have a shout out to James and Sam in compliance, because nobody loves compliance more than Benjamin C. Dean. I need to state the following. To clarify, the views and opinions expressed in this podcast are those of WisdomTree and Brett Scott and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment tax advice. Information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities. And reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results. Now on to the fun stuff. Brett, thank you for joining me today. It's really a pleasure to have you here. I've been following your work for easily a decade now, starting with the Heretic's Guide to Global Finance. You and I have tread different paths to get to where we are today, but I think actually we've had a lot of common experiences and interests along the way. So it's great to speak with you today. To kick things off, you can introduce yourself. Listeners, here's the book. It's Cloud Money. Go pick up a copy. I was walking through this bookshop in London the other week. I saw this on the shelf and quickly grabbed a copy, paid for in cash. And it was a great read. Tell people a little bit about yourself, Brett, and the book and why you started writing it.
I'm glad you saw it in the London bookstore because I never know how the distribution is doing. So that's good. That's good to know. I'm Brett Scott. I'm currently in Berlin. I used to live in London, but now I'm based in Berlin. I'm from South Africa originally. And yeah, it's quite hard to kind of condense all my history into a short soundbite, but my sort of intellectual background comes from anthropology and history, but kind of economic anthropology. It's a particular way of looking at economies that often differs quite a bit from sort of standard economics. So that's kind of where my sort of like intellectual background. But I actually went and worked in the financial sector during the 2008 financial crisis and over-the-counter derivative contracts, so like swap contracts or some sort of exotic derivatives. So I have a background as well in some high finance stuff. But then I moved out of that actually into the world of kind of financial reform, or basically how do you make the financial sector like less destructive, essentially. So worked with various groups on that. Also got into alternative finance. So how do you build alternative types of finance? And I put out that book that you mentioned, The Heretic's Guide to Global Finance, Hacking the Future of Money. That was from 2013. So it's a bit out of date now, and some of my positions have changed. But that was kind of one of my early sort of books on that. And then I kind of, since then, I've got a lot more involved in looking at the intersection between digital technology and finance, which is obviously becoming an increasingly hot topic. So, and also the fusion of big tech and big finance, right, via these processes. And so Cloud Money, which is my latest book, is really kind of looking at that, bringing together lots of my observations over the last 10 years about that topic.
So for listeners, aside from picking up a copy of Cloud Money, I can tell you from early on in the book, Brett makes it very clear one of the goals of the book. It is, to quote off page 3, it's designed to rebalance the skewed digital finance story, which speaks only of liberation. Think of it as a darker yin to contrast with a brighter yang. And I think you definitely achieved that throughout the book. There's a bunch of themes packed in there that we can talk about. But you and I have had similar observations. And I think one of the biggest ones that's throughout the book is this merging of tech companies, big tech, and then finance. We've got kind of a saying here, which is the finance never really had its internet moment. That is to say, kind of the Amazons of the world didn't come through and steam finance the way that they did small businesses, retail on high street. It's actually kind of on the back end remained largely the same. But there's also other topics here that are more pertinent today, like automation. We've got a nice little package of topics around privacy and security, convenience, access. And then, the last point is around agency and coercion. I hope by the end of our episode today, we'll touch on each of them, maybe not in turn, but certainly in totality. Let's kick things off, though, at the start. The digitization of money. So, it's no secret that money has been digital for a very long time. Most money is ones and zeros in databases. It has been for a while. Run us through quickly kind of like what you've observed over the last 10, 20, maybe 30 years in the digitization of money. And we can think a little bit about whether it was inevitable or not as we go.
Yeah, sure. So, I mean, for quite a long time, there's been this narrative of an impending cashless society. But it's only in the last 10 years that it's really started to accelerate quite a lot, to the point where people are starting to, especially, you're based in London, you'll really feel that acceleration process has happened in the last couple of years, right? To the point, lots of people have lost the belief that you can actually expect to have different alternatives when paying, all right? Everyone basically is sort of getting into this idea that the only way to pay will be digital in future, right? And that belief system has only really emerged probably in the last 5 years, probably, in terms of actually feeling it around you. But that idea of this imagined inevitable change into the cashless society has been around for quite a long time, right? And so, yeah, I mean, part of what I'm doing in the book is to try and explore how those processes happen. One of my first observations is that there's a particular narrative around why that happens, all right? And the particular narrative, and actually the original reason I started writing about cashless society was I was annoyed by the narrative, all right? I'd see these newspaper articles where they'd say, oh, consumers are moving towards digital payment. It was just such an apolitical way of talking about this. It was like some kind of like evolution was occurring, right? As if there was no agendas, as if there was nobody who benefits from, no like big powerful players who benefit from this, right? And I was like, there's definitely a lot missing from this picture about what's being presented. So my first articles about cashless society were coming out about 2015, 2016, when I was starting to basically uncover or point out the various players who have actually for quite a long time slowly eroded the public's confidence in cash, or created these sort of narratives that cash is old, inefficient, dirty, and dangerous, essentially, right? And yeah, so I was starting to look at that, and of course, then when I was writing the book, I started writing it in 2019, and I handed the first draft in March 2020, just as the pandemic suddenly took off. And then you really suddenly saw all the work that had been done by the big sort of players over decades, kind of eroding the cash system, trying to automate things, suddenly accelerate like crazy, right? In the context of the pandemic, right? So the whole sort of anti-cash drive became really supercharged by the pandemic. But yeah, I'm kind of circling around this question, but like I guess one of my big things has been to try to show people or explore the processes that are going behind the scenes in why the changes are being happening to the payment system, and to stand against this kind of like idea that it's just this organic bottom-up process, that there's top-down players as well who are involved in interacting. And actually, one thing I'll quickly go to say is, you mentioned this yin-yang point I made at the beginning of my book, all right? Which is that this is partly it. There's a sort of a particular narrative which presents all forms of digital automation essentially as being for the benefit of consumers. All right. The only reason it's happening is that everybody is demanding it, It's only for the good of everybody in the world that this is occurring. All right. And fine, there are these various benefits that occur with certain forms of automation, but there's a dark side as well. And that dark side includes the players, the big, that are making huge amounts of profit from this, and a bunch of other negative factors. And in the book, I'm trying to highlight that to rebalance the story.
I really appreciate the way in which you frame it there, which to end with is there are benefits from new technology, and then there are risks. I mean, years ago, part of the reason I got into cybersecurity years ago was because I'd spent some time living in Venezuela and everyone had cell phones. Bad monetary system, capital controls, all that. The one that really struck me, though, was that you could buy CDs on the street which had like the whole electoral roll written onto them and who had voted which way for Chavez as president in a referendum. And if you were on there voting like, yeah, get rid of him, you're out of a civil service job. I remember sitting there and like thinking like, oh, wow, this stuff is like extremely powerful in a way that can be very disruptive. I go back to comfy New York to finish off my studies, and I walk into a cybersecurity class and they explain to me like, yeah, all of this digital technology, it's ridden with vulnerabilities and there are people out there trying to break it. I was like, uh-oh, we're going to like have a more digital society and become more and more reliant upon this stuff. We have to understand how it works, how it breaks, and like how we can use it in a way that's we maximize the benefits and we avoid or minimize the cost, right? That came screaming through in your book to me as I was reading through it.
And also one of the things that I also kind of have a kind of meta position to some extent. I do have a kind of left-leaning political position, which means I'm also influenced by structural theories of the economy. All right. At the risk of scaring people from the US, essentially Marxist structural theories, right, which basically looks at big scale processes that happen in economies, regardless of what human beings might want. All right. So, in a lot of the stuff you'll be looking at, you'll say, look, one of the common things you'll see in a capitalist system is that at any one point, there'll be a bunch of stuff, which is the new technology, the new things, which in reality, what they'll be used for is to expand and accelerate the system, right? This is going back for a long time, right? There's always going to be a cutting edge, and that leading edge always is going to be used to expand and accelerate, all right, the system. And there's always going to be a romantic narrative painted around the leading edge at any particular point, right? Oh, this is the future. This is amazing. Like next is now. The future is here. Da, 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 da. It's the same old stuff over and over again, basically, right? The leading edge is like inevitable. All right. And then once it becomes entrenched as a de facto standard in society, that rosy narrative disappears. Right. Then it's like, you have no choice now. We have now recalibrated the society to use this technology. And that's the point when all the kind of like business owners will suddenly acknowledge the problems. And they'll say, oh, well, it's too late now. I'm sorry. All right. All right. We realized actually there'd be all these cybersecurity issues, but we never really talked about them before. All right. So there's this kind of like, one of the things in the book, I have this kind of like existentialist element to me, which is like, I hate the inauthenticity of the messaging. All right. Fine, cashless society, I understand there's a process happening in global capitalism where firms are automating and they don't like the cash system because it prevents automation, essentially. All right. But they had this whole sort of romantic narrative they paint around the digital systems. But once we become totally dependent on those digital systems, then suddenly everyone will be like, oh, well, I guess we now have to deal with all the cybersecurity stuff. And, this is like a societal problem that the government now has to try and help with through policy decisions, right? And that kind of thing. So this is what
That's highly relevant to where we're going to go. I mean, that topic of agency, I think we're going to come to towards, especially at the end of the episode, because I'm fascinated by the extent to which people can and can't shape the future. And we see that with technology. But we need to, before we get to that step, we have to do some of the other ones.
Okay,
like
cool.
You've already mentioned the cashless society. And I mean, I'm one of these people that like 10 years ago used to fight a lot for like online privacy, basically. So cash totally makes sense to me. But for the listener's sake, let's kind of go step by step. When you say cash, what do you mean? And issued by whom? And what are like the pros of cash, basically, in its form?
Yeah, sure. I mean, the first thing I say is I don't want to romanticize the overall monetary system, all right? But there are better and worse versions of our monetary system, okay? So when I'm doing pro-cash work, I'm not saying, oh, some utopia we'll have if we're using cash, right? What I'm sort of saying is like, a lot of my pro-cash work is about how do you maintain a balance of power in the monetary system, okay? And for a person to understand that, you've got to realize that, okay, our current monetary system is a hybrid system with different players, okay? It's a public-private system. So on the public level, there's a state that issues the cash. So cash is physical units of state-issued money, all right? There is actually a digital version of state-issued money as well, but we don't have access to it. For the ordinary person in the public, the only type of state-issued money we have access to is the physical version of it, which is cash. All right. Then there's what we call digital money, which, what should be called digital money was basically these what's called bank deposits. All right. Bank deposits are these digital type of money issued by the banking sector, okay? And the metaphor that I often use to explain this is to talk about them as being almost like digital casino chips, all right? So you're in London, if you have a Barclays bank account, you have Barclays issued digital casino chips, all right, that you will also call pounds, right? And actually in the monetary system, there's historically been this balance of power between the state issued part and the bank issued part, okay? What's increasingly happening in the move away from cash is that the banking sector is taking a much bigger role in the monetary system. It's essentially taking over, right? So a lot of the pro-cash stuff is basically about, we shouldn't let that happen, because if the banking sector completely takes over, all the negatives of digital payment come out, all right? And we can go into the specifics of that, but it's very important to realize this point that, when you're talking about something like the British pound or the US dollar, it's not a single currency. It's a whole ecosystem of currencies issued by different players, all right? So in the US, the base dollar is issued by the Federal Reserve and the Treasury, all right? That's cash, right? Whereas the digital units in your bank account are issued by like Chase Manhattan Bank, JP, or like Wells Fargo, right? And then players like PayPal build themselves on top of that. And so, all the implications around privacy, centralization of power, cybersecurity, resilience, all that stuff basically start to happen when the cash system goes down and starts to get eroded. I don't know if I answered that properly.
It's good. You've set up a nice scene here where we've got a basis for understanding that cash it's more complicated than a lot of people ever bother or can think about. But you need to understand that before you can start thinking about the pros and cons of different kinds of cash and how they're issued. And now the inevitable turn. This is the Bitcoin part of the episode where we turn, because Bitcoin is not cash. It's not even really digital cash, really. It's a database with open source software. And you have a nice way of describing in the chapter in your book where you introduce kind of Bitcoin and then go on to Ether as digital collectibles. And then when people are exchanging it, it's counter trade. So could we run through a little bit there, just explaining those concepts succinctly for the listeners, and then we'll think a little bit about the pros and cons of cash in its various forms versus a digital.
Okay, yeah. So when I'm talking about crypto, I'm very careful to distinguish. So in the 1990s, with your cypherpunk movements, who were building out the various components that go into the recipe that creates Bitcoin at some point. Yeah. They were one of the concerns in cypherpunk movements was if we end up in a cashless society, aka if the banking sector totally takes over the monetary system. All right, if we end up in that society, we will have huge problems of surveillance. All right, potential economic censorship, the ability to control people through their payments, block them, and so on. Not to mention a bunch of like resilience problems in the system and centralization of power. There's a bunch of stuff that comes out of which is the first part of my book is kind of looking at all the negative implications of the situation when the digital money system run by the banking sector takes over. All right, but the crypto movements set themselves up as a potential digital alternative, all right, in that context to say, like, if we have this cashless society, we're going to need a type of quote unquote digital cash to exist as a counterpower. All right. So certainly in the original Bitcoin, say, ethos is this idea that what it's trying to do is create this sort of digital cash system. In reality, what it's actually ended up doing, which is a separate thing to what it was trying to do, what it's actually ended up doing is creating a kind of tradable digital collectible that you can use ordinary money to buy and sell. And you can choose to use cash to buy or sell it, at least in the old days, or you can use bank-controlled monetary systems, right, to buy and sell Bitcoin, which is what most people do. So the vast majority of people who are using Bitcoin are basically going in and out of the banking sector, sending bank transfer orders in order to basically like stock up their a Coinbase account to then buy and sell what essentially are collectibles to them priced in money. Okay, so in reality, the crypto systems have ended up being these digital collectibles that you can trade. And I have a bunch of points that I could make about why that happens, right? I'd say that things like Bitcoin are structurally unable to become a proper monetary system, all right? But they're very good at, they sort of these digital objects that you can very easily pass around, right? And once you have a price for a easily transferable digital object, a new phenomenon emerges, which is called counter trade, all right? Which is when you can essentially use the price of that object to swap it for other things that have prices, right? So counter trade is a process where you use a non-monetary object for exchange via its monetary price. Okay, so you basically are, when you say quote unquote are buying something with Bitcoin, you really are buying it with its US dollar resale price. Okay, which is why if you ever look at quote unquote Bitcoin prices for any object, it's constantly fluctuating every 5 seconds as the speculative market in Bitcoin to US dollar changes, because basically people are working on a counter trade ratio for those exchanges. All right. So what's happening, what's quite interesting in the crypto world right now is it hasn't actually, it doesn't really compete with the monetary system, but it rides on top of it. All right. Through this process of counter trade. I hope that's kind of obscure, but hopefully that's sort of.
That's very good clarification, if only because there's a few points there that aren't obvious to people who haven't watched this thing from the start. And I mean, I like the way you point out, like the way it was intended to be used. And then once you put this thing in people's hands, what do they actually do with it?
Yeah.
There's an element of like the adoption curve where the early people are driven by completely different values and goals to people who start using this tool later on. Mm-hmm. There is the whole element to which it's like blurring with now traditional finance, which we'll touch on later. But there is one kind of bit here I'd like to kind of think closely about, the difference between cash and Bitcoin or anything crypto thing where you hold private keys. So mentioned earlier on, like this idea of volition, who controls what, who has a choice. One of the things that I always liked about Bitcoin was the way in which if you possess the private keys, then you always have control over how you basically sign transactions on this open database. In that way, it's something that people have a lot of control over in the sense they possess the private keys. In the same way, if you've got cash, you're holding cash. Now someone can take it off you, right, if they mug you, but there's a certain physicality to it that's emulated somewhat by the private key element. But there are also kind of other issues here around like privacy on an open blockchain network. There's some issues around kind of who hosts the private keys. People argue about whether it's custodial or non-custodial and whatnot. Bitcoin doesn't do a great job of cash because of the volatility in the price, right? But there's all these other issues there. Do you see any bright spots in that combination of technologies that's maybe been lost along the way?
Well, look, you raise an important point. So let's just forget about Bitcoin briefly. Let's look at the pre-Bitcoin sort of digital systems, right? So the original debates around cashless society really are about, we have an existing balance of power between state-issued cash and bank-issued digital. Will the bank system take completely over, right? And will we be stuck in the system where the whole our entire payment system is enclosed by these big corporate players? Okay. Now, historically, the cash is called a bearer instrument, which means whoever holds it basically controls it. Nobody needs to know who you are. you can finalize a trade just by handing it over. There's no identity required in order for cash to work. Whereas the bank systems are ledger systems, right? Essentially, you have an account and some big intermediary sits there, and in order to make a payment, you have to ask them. You say, "Dear bank, please will you make a transfer to this coffee shop's bank account?" All right. With your digital casino chips. And of course, they can then watch it, but they can also decide whether they want to do it or not, right? So you basically have this total sort of dependence upon this entity. What's interesting in the crypto world, at least say in Bitcoin, was this hybridization that occurs between those two models, all right? Where essentially your private key, a transaction cannot be initiated unless you do it, all right? But it cannot be completed unless a bunch of ledger keepers complete it, right? So it has a weird combination between a bearer instrument and a sort of ledger system, right? It's like a ledger system that depends upon others to update it, but that you're the only one who's able to initiate the request for that to happen, which means it sort of comes close to being a digital bearer instrument. It sort of, at least it feels like that to somebody. You've got a greater degree of ability to control it. And then that's a very interesting property. I think that's actually very often underlooked. This digital bearer instrument concept is very fascinating. But as you mentioned, one of the sort of trade-offs in the midst of that is that to have that happen, you need this massive open ledger that everybody can basically see, which becomes like a potential problem. Although, I mean, I don't follow all the technical stuff, but I guess all the people trying to work on the sort of ZK snark stuff are all trying to like figure out some, tech solution to that. But also the fact that actually the majority of people in society often actually don't like the responsibility of having control of their private keys, and will often are just happy to sort of hand it over to like a massive player like, FTX or whoever, Coinbase. So a lot of these sort of like theoretical properties of crypto, when they come into the real world, actually totally change. Not only does it not operate as money, it actually operates as a money-priced digital collectible. But also actually it ends up being centralized. It ends up like, giving away your identity. I actually have a friend who started a massive company called Chainalysis, which essentially specializes in de-anonymizing crypto transactions. Incidentally, as an anecdote, the reason I know him is that he originally was an Oxford University student who was interested in local currencies. And he was interested in these very small-scale alternative currency systems, and whether he would be able to hybridize them with crypto systems. And anyway, he's created this gigantic crypto, or this sort of system that the crypto people hate now.
Oh, I'm familiar with Chainalysis, Brett. I can't go into the details now. I'm also familiar with the elliptic people and the guy who started that. Very similar story. It's that kind of one of those ironies, right, of how the world works out. The privacy element, though, like you're right, someone's working on a technical solution to it, because it's just like this kind of obvious problem that is actually got a lot of kind of attacks as well. I mean, like sanctioning of Tornado Cash. You've got pushback against things like Zcash. It's all this stuff. It's always there. But there's definitely a shortcoming. You give up. Well, cash doesn't travel well geographically. This Bitcoin does, or any of these crypto tokens do. But you give up stuff in the process. Like you say, you have to protect your private keys and make sure someone doesn't rubber hose beat it out of you, or you don't lose it. And if you're going to hand over that responsibility to someone else, you better do your due diligence. It's like what is old is new again.
One of the sorry,
go ahead. No, please.
One useful metaphor to introduce here to help people, because I haven't necessarily gone into some of the details of the cash system, but a very simple and useful metaphor to get into is to think about the cash system as being like the public bicycle system of payments, all right? And the traditional digital stuff, the banking sector, is basically being like the private Uber of payments, right? Now, I'm not going to use my bicycle to try to cycle to the US, for example, right? Or something like that. Or go long distance, but I might use an Uber, right? I don't know how you get to the US, but you get the point, right? You have it on the one you have a sort of like higher reach, right? And it might be faster, but you're losing your autonomy. You're basically depending upon some third-party entity that can also stop you from doing things, right? Whereas your bicycle system, you have a lot more autonomy, but you're not going to be using it necessarily for everything, right? And that's the best way to think about the distinction between the cash system and the digital payment system. Is, cash is the bicycle of payments. Now, within this now, the crypto world has inserted itself, and it'll be interesting to think about what metaphor crypto people like to think about themselves. I mean, are they the e-bike? Is it more like a kind of like an Uber system where you sort of hope there's not a central player controlling it, right? But one thing I'll just sort of a meta point to make is that one of the problems that I have is when I'm advocating for the protection of the cash system, which is a huge part of many people's lives. A lot of people in the crypto world often kind of poo-poo that in a way. They say, "Oh, that's a lost cause. What we got to do is throw our entire sort of weight into promoting the crypto systems." And I often think it's a distraction, right? There's a big an immediate real-world need to protect the actually existing physical cash system rather than projecting hopes into an imagined sort of crypto systems. I think a lot of people get distracted by the crypto. Not that it's not important, but it does operate as a distraction a lot of the time. And unfortunately, the hype around crypto systems is often actually added to the anti-cash sort of rhetoric in society, rather than it doesn't really stand in solidarity with the sort of like cash question. And one of the reasons for this, to just end this off, is that many people, this goes back to my sort of meta analysis, many people have internalized the idea that the only way that societies progress is through ever more automation and digitization, right? Which means many people struggle to imagine a scenario where cash survives because basically cash is hard to automate, right? Whereas you could conceptually imagine crypto as being something you can automate, which means actually it's easier ideologically for people to imagine a future of crypto than for them to imagine a future where there's still this kind of like cash system.
Let's turn to the automation of cash, because it's something you touch in the book. It's something that takes up a lot of my time in my day job. And it's also a very obvious manifestation of how like crypto and traditional finance worlds are blurring, and how big tech, or tech in general, is merging with finance. The term is stable coins. I hate the term. It's just so annoying, and I hate everyone lumps everything in the same bucket that are stable coins. But stable coins, most of them are US dollar pegged tokens. There's also lots of other ones pegged to gold and whatnot. What are the implications of that? Because that's, again, you've outlined very well, like the bank issued money, central bank issued money. We've got like Bitcoin, which is issued by the miners and the network. And we got stable coins. Does that, and this is me putting up a clay pigeon here, do stable coins fix this? Does it square the circle where you've got digital cash that's tied to some deposit somewhere?
I mean, nothing fixes anything, right? There's a continuous process of contradictions and trade-offs and adaptations, right? So stablecoins are, at least the backed stablecoins, are a new addition to the monetary system. They actually are part of the monetary system, unlike Bitcoin. And they don't operate as digital collectibles largely. They're often plugged in to the actual monetary system. Bear in mind, like the monetary system, as I said, operates in layers with different issuers. The US dollar has tens of thousands of issuers, all right? And that's often hard for people to understand, but basically, every single like if you got credit at a sort of company, at a sort of a big store like Walmart, they basically issued a type of e-money to you, right? That's denominated in US dollars, all right? So the way to think about this, I use this casino chip metaphor, right? You go to a casino, you hand over cash, you get casino chips. Those casino chips are a privately issued form of money, all right? But they're tethered back to the cash system. If I took the casino chip and handed it to another player and got another casino chip, that would be like a new type of like third layer system, right? So what's happening in our system, you have the state as a kind of a base layer. The banking sector is a kind of second layer. Players like PayPal is like a third layer. And in reality, the stablecoin systems are just a new third layer player. So something like Circle, for example, that's issuing like Circle USDC. At some level, they have US dollars in bank accounts, or alternatively, some like US dollar denominated like bonds or something. And if you take those units to them and say, I want you to redeem these sort of digital chips you've handed me back they're kind of legally required that some level to do that, right? Much like PayPal is required to do that. So the stablecoin systems are kind of an interesting addition. In the early days of stablecoins, they had a more anarchic feeling to them, right? Because they were essentially these like almost like black market promises for bank deposits, okay, that you could pass around that would basically be, dollar denominated or denominated in some other currency, which actually would operate as a kind of digital cash, as it were, right? So there was an interesting claim being made by the stablecoin players that, we talked about that digital bearer instrument concept we talked about earlier, that kind of like a third layer digital bearer instrument version of the US dollar, which is authentically interesting, all right, that potentially is destabilizes a lot of stuff, right? What's happening now, they've been brought under the same regulatory systems as lots of the other traditional digital players are having. So they're kind of like being a bit sort of pacified now, I'd say. But yeah, the big sort of topics in monetary politics, and sorry, I'm kind of like going in circles a bit, but the big topics in monetary politics right now concern the fact that if you're looking at those layers I talked about, you have your sort of your state layer, your banking layer, and then these third layer players, is that the stable coins are a new addition to the sort of layer 3 players. But then there's this new layer 1 player, which is the CBDCs, the central bank digital currencies. The reason why the CBDCs are becoming an issue is because the cash system is being undermined and the balance of power is being messed up. All right. So the central banks are now saying, if we're to maintain stability in the monetary system, we need a new form of layer 1 money, right? And this is then causing a lot of panic among the layer 2 players, because they're like, we traditionally dominate the digital systems, and now you might start to compete with us. All right. So this is all the kind of like big meta politics. And then the side is Bitcoin, right? And you can use layer 1, 2, or 3 money to buy and sell Bitcoin, right? Which in turn will give it a monetary price, which will induce its ability to be counter traded, right? Which is essentially then what, in El Salvador, for example, maybe you can counter trade it there for a meal at a restaurant. And so that's the broad kind of sweep of what's going on.
Yeah, it's stepping back. It's really good because I sit there and I look at it and I say, why is this happening? So like, I like the way you say the stable coins are an appendage to this third layer. And I kind of asked, I've traveled enough and seen enough people using tokenized US dollars in different parts of the world. I say, why aren't they getting this from their banks? Or why isn't PayPal or Western Union giving them this? Why are they going to this alternative? Now, stablecoin started as a way for crypto traders to like not have to leave the crypto exchanges in order to get US dollars. But then suddenly this thing, once you put it in lots of people's hands via their cell phone, has sprung to life in ways that I knew US dollars were popular outside of the US, but I didn't realize just how much pent up demand there is for it.
Yeah, well, I mean, partly there's lower requirements to be able to use stable coins, right? Remember in the original sort of black market version, it's just kind of like, what's the difference between, say, a PayPal IT architecture and the original stable coins, like Tether architectures? Like, well, PayPal is a third layer digital chip for US dollars that is in a centralized database. To get an account in that centralized database, you got to tell them who you are. You got to prove your address or whatever. I'm not sure what the exact conditions are, but you got to attach your bank account to it. There's always various things, right? Whereas in the stablecoin systems, you just got to download a wallet and you get a sort of like public key, and and then you sort of have an ability to receive these units, right? So it sort of technically has lower requirements originally, at least, to be able to interact with these. And so that's sort of one thing that's going on. To be honest, haven't been following stuff like stablecoin adoption in different countries. I'm not sure who is using stablecoins, but this was always one of the big things. You have a sort of a US, essentially a claim upon US dollars, a third level kind of chip for US dollars, and without much regulation around it, that can be passed across borders very easily. My family's from Zimbabwe. Zimbabwe is a dollarized economy because the Zimbabwe dollar failed famously, and then basically Zimbabwe became a dollarized country. But what happened then was essentially US dollars and cash was brought in, all right, to Zimbabwe. And there's always been these cash shortages in Zimbabwe because of US dollars, because it's hard to get the dollars into the country, all right. Whereas something like a stable coin, my family there could probably quickly just download a an app and then receive this from somebody, right? And so this is actually becoming a potential problem, though, because, for countries that are trying to maintain monetary sovereignty, all right, and who don't want to become sort of like vassal states of the U.S. the U.S. government, they don't, it's, for a country, it's a very controversial thing to be dependent upon the monetary system of another country, right? So the stable coins are a potential problem, right? Where, let's say my Zimbabwean family is dependent upon the decisions of like the US Federal Reserve for the stability of their own units, right? They have no political say at all in what's happening. This is what the various sort of countries beyond the US are concerned about, right? Unfortunately, you'll get these like US libertarians saying stuff like, oh, we'll save people in Zimbabwe by making them dependent upon like stable coins, dollar denominated stable coins. All right. And it's like easy for you to say. You have some like democratic say in the US economy, whereas these people don't, you just like want to essentially have this like global system where everyone has to be dependent upon like third layer dollar chips. So there's a lot of politics in this.
Yeah, and there's structural elements there that go both ways. I mean, what's interesting here is that we're talking in essence about whether people have a choice and whether they take that choice. I was in Turkey recently and I was paying for some stuff, and the guy, I said, how do you want me to pay? Cash, card? He goes, cash, card, crypto. I said, what crypto do you want? He goes, Tether, send me some Tether. I go, which network? He goes, I don't know, but here's the address and the US dollars would be great. Thank you. He's got a choice there. He can download the application. He holds the private keys. He can accept whatever stable coin he wants. If you want a Bitcoin, you could get that as well. But it's interesting there in the sense you've got a duality. It's like choice at the individual level, potentially community. But then the inverse is, well, you're accepting US dollars in Turkey. Maybe that's better than the lira. Like they certainly want the US dollars. It's just not all of them can get them in the traditional system.
Unfortunately, one of the problems in a lot of this in sort of the surface level analysis is that people aren't thinking structurally about this. It's like, sure, at an individual basis, if I'm a merchant, for example, let's say I'm in Nairobi or somewhere, like, and you say, hey, you know what, I probably don't want Bitcoin. It's far too volatile, right? If I'm operating a small business, like the sort of effect on my nervous system of having this thing like spike 40% and then crash and stuff, it's just too much. My business is like I'm trying to sell, let's say consumer electronics or something. I don't want to be thinking about endless fluctuation in my Bitcoin account, right? Whereas a stable coin, fine, it stays tethered. It seems to like operate. It has the stability, which means as a business owner, I can be like more thinking about what I'm actually doing with my business, right? So from an individual perspective, sure, this makes sense. And there is large amounts of dollarization that occurs in lots of these economies informally, right? But then bear in mind that if you're actually based somewhere like Nairobi, all your infrastructure around you is partly predicated on the state being able to actually have some kind of like acceptance of its own monetary system. All right. So structurally, it doesn't pay off if suddenly you're all kind of like undermining your own national monetary system, right? Because everything around you is dependent, at least at some level, on having a kind of integrated national economy. So there's a mismatch between the sort of individual perspective and the sort of systemic perspective, which is why there's a lot of problems with traditional libertarian analysis, because often it's imagined, if the person wants this, it must be good. It's like, well, fine, in Turkey, if everybody actually moves to the US dollar, Turkey doesn't end up in a better situation. All right. Your whole infrastructure crumbles. You become dependent upon like the World Bank to survive. I mean, this is like a type of like peonage, essentially, right? So there's a lot of like geopolitics in these payments things, which is why countries like China, for example, spend so much time trying to protect their systems and get their systems used rather than having the US systems used, right? So anyway, this is a big kind of like, I'm probably waffling on a bit here. But you got to kind of do the sort of geopolitical analysis of the monetary systems as well, in the process of deciding whether they're good for the society or not.
Absolutely. And you mentioned the Chinese Communist Party. I mean, the amount of capital flight that's occurred using stable coins, you're right. They put a very tight noose on it. And is that good or bad? It depends who you are, really.
It depends on who you are, yeah.
Yeah, it depends who's in control, who's running the show. It's certainly political, and there's definitely a geopolitical dimension to it that can't be ignored. We're going to come up on time, unfortunately, soon, but we can end this kind of looking out. We usually end these episodes looking at the future. But there's one wrinkle here, which is in your book, I like the way you ask the question, is this inevitable? Or it's painted as inevitable that all of this will happen. But from our discussion today, I hope something that's come through is that the steps along the way that have been taken, some of them were not inevitable. There's either structural elements, or there's individuals who make decisions, or communities of people, or they don't make decisions. So looking out into the future, is everything we've just talked about inevitable? That's kind of like a soft question there, because of course, like everything's contingent on other things. And then there's a question around volition and choice and the ability to craft a future. Where do you see it going? And if we're going to end up in a totalitarian nightmare, like, you can flag that here now.
Well, look, I mean, nothing is inevitable. There's a lot of adaptive changes that happen in human societies. What I can tell you right now is that there is a narrative that exists that digital automation is unstoppable and is for the benefit of all people. That's a de facto narrative that exists. Whether that narrative survives or not, I doubt it will survive, especially in a future with, say, like weather events and climate change and cyber attacks and also like digital burnout. I think people eventually will start to culturally will start to reject this idea that human progress means ever more speed and like scale and like automation, right? So the whole singularity vision will probably start to feel a bit tacky in 10 years. So, but certainly we have this narrative that this inevitability exists, and I don't think it does actually exist. One of the things, though, of course, putting my structural hat back on, certainly in large-scale capitalist systems, there are processes that occur regardless of what human beings want, all right? And this is often when you look at what's so fascinating about the cash debate is that when you speak to people, there's many people who actually love the cash system, but who nevertheless feel that there's some kind of futility to holding on to it. Because at some level, they sense that the economic system around them is accelerating all the time. And they sense that anything that's sort of a slower, but more down to earth will eventually kind of be pushed out. All right. So they have this sort of strange conflict in themselves. And this is basically, if you want to talk about this, it's like the internal tendencies of large-scale capitalist systems often at some point start to hit into the limits of what human beings actually want, right? Now, back in the 1950s, it's kind of the case that maybe people are romantic about flying cars and stuff like that. But increasingly, lots of people the system's getting so fast that they start to feel burnt out by it, right? So there's a lot of this kind of sense that actually this endless automation might be against our sort of humanity at some level, right? So I think that's starting to happen. And so in terms of the sort of this question around agency, people are still told that they have agency. We have a lot of ideology that we have agency, but in reality, we still simultaneously feel that these kind of forces around us that we can't control. All right, so we're in a sort of strange contradiction. And one of the ways to think about this is I sometimes think about a pyramid. All right, and maybe I can end off with this pyramid point that. In various sort of romantic narratives about progress, they say all the people at the bottom of society, all the ordinary people, are the ones who demand something, and this is what makes it happen. And then all the big players at the top, like the banking sector and the big tech firms, simply act to serve those people. They say, oh, look, all the people want endless automation. Let us give it to them, all right? Whereas the conspiracy narratives flip that around. They say there's big players on top trying to project downwards upon people, all right? They are the ones controlling everything, and they force you to do stuff, all right? In reality, it's actually a kind of dialectical process between those, all right? People do actually have forms of desire for, speed and so on, and these big players might at some level perceive themselves as serving those people, but those big players as well are also capitalist firms trying to extend their power and scale, and they will project downwards at the same time. So you have all these cycles going on. And this is what makes it very hard to understand, because we experience ourselves seemingly choosing to use these technologies. And in reality, the whole environment around us is often being sort of like engineered to some extent by these big players at the same time. So there's this weird mix of agency and lack of agency, which I don't have the solution to, other than to say you got to maintain balances of power in the system to try and like keep things in check.
It's super interesting. I mean, I know we're coming up on time, but what I found fascinating about this Bitcoin and crypto space is, it is very disruptive. You've already said Bitcoin exists outside of the system. It's now inspired central banks to try and issue their own digital currencies, which Morgan Stanley calls an existential risk to banks. The software can be written by individuals and put out on the internet open source, and people are free to use it or not. So there's this churning effect going on. But at the same time, and you point this out in the book, there's also these countervailing forces, structural forces, it's elements trying to co-opt the insurgents as well.
Yeah, for
and
sure.
It's a really messy, complicated scene. You and I get to kind of watch it as part of like what we get to do from day to day. But for folks who are listening, it really, to the extent to which we can clarify and help navigate it, that's a good thing because it's not obvious. But we are on time, Brett. Now, where can people find you on the interwebs?
I think the best place actually is, I used to say Twitter, but Twitter's kind of getting a bit like, I don't know, it's getting a bit toxic. I am on Twitter, but I think if you're interested in my work, go to my Substack actually, which is brettscott.substack.com. It's called Altered States of Monetary Consciousness. And on there, I put kind of essays, which, sporadically, I kind of put these big essays out, which sort of outline my thought, hopefully like quite, thoughtful things about money that are worth reading. And so that's a good place to actually to follow me. But I am on Twitter as Suit Possum as well, and I put out catchy sound bites on there sometimes.
Very good.
Yeah.
Well, Cloud Money, get the book, Cash Cards, Crypto, and the War for Our Wallets. It's a great kind of very quick tour de force of the last decade or so of changes in the monetary and financial system, and then opens the door to like what to look at into the near future and help folks navigate what is a fast-moving and actually very critical part of most people's daily lives. We're out of time, though. Wisdom Tree Prime, if you're in the US, join the waitlist. You can find me at Benjamin Dean on Twitter. Hit subscribe so you can come back and get this easily. And if, as a reminder, you'd like us to cover any specific topics in future episodes, email cryptoclarified@wisdomtree.com. Brett, thank you very much for joining me. It was a pleasure. I hope you have an excellent day.